It's about that time of day again. My name is Joseph. Tuesday evening, October the 9th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bullish and trying to complete the pendulum swing target up around $76 a barrel. And my plan is to use the low of a spike in channel pattern for reliable buying opportunities along the way. The S&P is flat with a trading range tonight, and that tells me to buy the low, sell the high, and focus on those failures. And I've got my eyes on the two-try rule tomorrow. Nasdaq is also sideways, this time with a triangle pattern tonight, and that tells me to fade those breakouts using failure patterns. But with a triangle on the Nasdaq, our focus is on the swings. We'll talk more about that in just a moment. Gold is bearish with a spike and range pattern tonight, so my plan is to look for selling opportunities using the two-try rule pattern above the highs tomorrow. And wrapping up tonight on the euro is bullish and rotating off the low of a trading range, and my plan is to use what I call a failed failure pattern for buying opportunities going back up to test the high of the range tomorrow morning. Well, we're back from the holiday break with some big opportunities setting up for Wednesday's trading session, and as always, I got another great newsletter in store for you guys and gals tonight. Plenty of reliable setups setting up for Wednesday. But before we get into the charts tonight, I need to remind you, if you're watching me on YouTube this evening, you can find a detailed description of this entire trading strategy. It's written out right here on my blog at sidewaysmarkets.com. If you're on the YouTube channel right now, check the links in the description of that YouTube video. Also, if you have any questions about anything covered in this video, please remember to post those questions in the comment section below. And don't forget, if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And of course, if your goal is to become a consistently profitable trader, you can kickstart your new trader transformation by joining our mailing list right at the top of this page. Also, don't forget to, right below this video tonight on our blog, you can download all the charts that are being used in tonight's video. And then also don't forget, in the upper right hand corner, you can call us toll free or use the live support tool. I'll make sure that live support tool is online right for you guys, but use that live support tool. Call us toll free if you have any questions along the way. All right, let's jump into our charts here. First things first though, let's grab a look at the schedule here for tomorrow. Of course, tomorrow is a Wednesday. It's going to feel like a Tuesday tomorrow because of course Monday was that holiday. Also have a lot of the major news pushed back 24 hours this week as well. So taking a look at this Wednesday session tomorrow, we get the PPI number here at 8:30 Eastern time, so we definitely want to keep our eyes open early tomorrow morning. Whenever I think about PPI, that's inflation, right? Inflation number, you're thinking currencies like euro, like the yen, like the Aussie, and of course you're thinking about gold, silver, copper, right? Any of the metals. So tomorrow morning, PPI number at 8:30 Eastern time, we're thinking inflation, right? Inflation means dollar, dollar means metals, right? Metals and currencies will definitely be on our radar tomorrow. Also, you'll notice too, there is no inventory report tomorrow. There will be no inventory report tomorrow morning at 10:30 Eastern time. That's been pushed back to Thursday at 11 a.m. Eastern time. So most of the news will be packed into that Thursday session. And of course, again, tomorrow morning, big news tomorrow for inflation. That means gold, right? That means currencies, metals and currencies tomorrow morning at 8:30 Eastern time. Speaking of tomorrow morning, don't forget we open up our trade room every morning at 8:30 or just say 8 o'clock Eastern time. And that'll give us plenty of time to get ready to trade that 8:30 news tomorrow morning. Let's jump into those charts here tonight. Let's see what we're looking for here for Wednesday's session. We'll start off with crude oil, then over to the S&P, the Nasdaq, the gold, and of course the euro. Now I got to give you a heads up, I'm feeling a little bit under the weather here this evening, but as always I want to make sure I give you this newsletter every evening so we can get ready for tomorrow. So I do apologize if my voice is a little bit raspy here this afternoon. I may not sound like my 100% self. I'm going to push through this newsletter and make sure we're ready here for tomorrow morning session. Starting off tonight on crude oil, crude is bullish with a trading range, a pendulum swing, a channel, and a measured move on the chart this evening. Now it's easy to see this trading range pretty much dominated today's price action. I mean, everything pretty much ever since last Friday has been rattling around right in this trading range. You can also see the move below that trading range is also giving us a pendulum swing target, right? The amount of the move below the range is oftentimes the amount of the move above the range, and that pendulum target puts us just shy of that $76, right, big round number. You can also see we have, ever since Monday morning, about 9 o'clock on Monday, right, we have a bullish momentum, right? That bullish momentum tells me my focus, at least for now, should be buying at support levels with the proper entry patterns, with the goal of getting up around that pendulum swing target at 76. So knowing this, my job is to find support levels and combine those support levels with the appropriate entry pattern. And some key support levels that I can see would be the low of this trading range, the prior swing down at 74, the low of this channel, right? Just to name a few. So I want to be a buyer, but I want to buy at support. I want to make sure I'm not buying into the top of this range. I don't want to buy into resistance, and I also want to make sure I'm not buying too high tomorrow either, because as we start getting up into this 75.56 to 75.95 area, we're going to start seeing quite a few sellers enter the market up there. That's where we can expect to see some profit taking from the bulls, sellers entering the market and trying to sell back down again. So as I zoom in on this chart right now, again, it's easy to see that momentum is bullish, right? We just want to make sure that we're not buying right into the top, right, of this trading range. So there are ultimately a couple different opportunities that we can see right now. One is going to be down at the low of the range, and the other would be, right, as we go higher, just above the high of that range. So a couple scenarios we want to consider. Let's first think about what if the market pulls back, right, as we go lower. Now, I'd love to get this down or in the low of that range, but we have to see the right pattern. We're looking for a combination here now of what I call a two-try failure into a hidden channel pullback. 1, 2, go, pull back, and go. So what I'm looking for here is I'd like to see us pull back down near the low of that trading range. That will constitute the first try for the sellers. Then we're looking for that two-try failure pattern. I want to go back to the moving average, let those bears try a second time. Now that creates the one try, two try rule. Now we know what the stops are for those sellers, and we can now look to buy into those stops. Now, once we see that rally going higher, make sure we're not buying into that high of that range. The next stop now is I like to go out, find a new hidden channel, call this the hidden channel pullback, and we look for the pullback off of that low. So two easy buying opportunities if we can get price back down to the low of that range. One is a two-try failure pattern, the second one being a hidden channel pullback pattern. We'll talk more about that as we go. Now, as we go higher here, I've got to be real careful. I don't want to buy into the high of this trading range. So very similar, I'm looking for a one try, pull back to the moving average, also pull back to the high of that range, second try, and then now once again we have that stops to get run. I'm looking for a nice strong signal candle to be a buyer into, again, another two-try failure into a hidden channel pullback, right? Ultimately trying to use the top of that trading range, right, for the pullbacks, looking to buy, right, the low of that range. So again, same basic principle here. We're below the moving average. We're looking for a pull back to the moving average now. Hopefully those sellers will try to sell this market lower. If they can sell this market lower, they're selling right into key support at the low of that channel, and we can then look for that failure into that hidden channel pullback, right, and that rally going higher, right? And of course, at this point now, those targets are easy. We want to take a quick target off at that 56, but definitely trying to leave that runner up around that 75, 95, right, tomorrow morning. So we know if the price pulls back, we know if the price goes higher here. what if we just sit here going sideways tomorrow, right? What if we just sit here going sideways? Then what do we do here for tomorrow? Well, we'll still have a bull bias. There'll still be a bull market into that trading range. But if we start sitting here sideways, now the key is going to be using the 2-try rule for 1 try, 2 tries, and then buying right back up. 1 try for the bears, below the range. 2nd try for the bears, right? And then we'll look for that buy going back up to retest the high. Last but not least, well, maybe not last but not least, right? But what if the market just jumps higher here? What if it doesn't pull back? What if we don't get a pattern? What if this thing just jumps here, right, and rallies higher? If it jumps and rallies higher, I never like to buy as the market's going higher. So if we do see it really start to stick this sucker higher here, wait for those traps, and I look to buy low by using what I call a trap pattern, right? A trap, in this case, it'd be a bear trap pattern. So we've talked about a lot of scenarios here, right? We've talked about the 1 try, 2 try failure into that hidden channel, right? Hidden channel pullback. That's here. 1 try, 2 try failure into that hidden channel pullback pattern. We're also talking about those trap patterns, right, as we go higher. Now, right now, all I can really do is illustrate what these setups will look like. But if you'd like to see hundreds of real examples of these traps, 2-try failures, hidden channel pullbacks, and a whole lot more, I've got a great resource for you. I'll put a link in the upper right-hand corner for our free trading class. You'll also find this linked up in the description here on YouTube. And if you're on the blog at Sideways Markets, you'll also find that right below the video on the blog. So not to worry, pause the video. I'll be here when you come back. Make sure right now you get registered for that free trading class. I'll teach you all about the market analysis, the technical analysis, the patterns I use, and I'll show you literally hundreds of those setups. Now, what would it take here right now for a breakout? What does a breakout look like on a range? Breakouts got to be strength, pullback, strength. We call these what? We call these 1, 2, 3 breakouts, right? 1, 2, 3 breakouts. Now, I joke around with you guys a lot about this term, but the reality is it's very important we see the 1, 2, 3. What is the 1, 2, 3? Well, let's take, for example, back here, right? Notice how we had that strong move down. That'd be 1. Then we see a pull back to the moving average. That's 2. The breakout would occur if we saw some follow through outside of that range. We haven't seen that follow through. So, for example, right now, if we see a strong move up, we hold the pull back to the moving average, and we break higher, that now becomes my 1, strong move, 2, pull back to the moving average, and 3, break out of that trading range. Now, this can happen in any direction, right? Let's say we pull lower here, right? We see that strong move down. We pull back to the moving average. And instead of the 2-try failure for us to buy off that low, what do we get? Strong move through. Yeah, if we get that strength moving lower, pull back to that moving average, and then strength again, well, now we know we have a successful range breakout, a 1, 2, 3 breakout. Once we do get that, then we can find that new channel. I like to use hidden channels, draw off that low, draw off that high, right, and then up to sell. I can usually find that level of support to act as resistance, and that's where we're looking to be a seller from there. So we're keeping an eye out for those 1, 2, 3 breakouts, but remember, they have to start on strength. The bulls have momentum for now. Be careful buying into the high of these ranges and buying into resistance. Focus on buying at support. And don't forget, tomorrow morning, 8 o'clock Eastern time, we're going to execute this strategy with all of our clients. So join me tomorrow morning with all of our members. Let's keep going. About some S&P right now. S&P is flat as a board with a triangle trading range and a pair of measured moves and a hidden channel on the chart this evening. Today's price action was back and forth all over the place, clearly struggling to find any real solid direction, which tells us the market is balanced without any real bias, right? We go up, we go down, we go up, we go down. Looks pretty flat to me, doesn't it? So, knowing that we're balanced, knowing that there isn't really any real direction, my job now is to identify support levels and resistance levels so I can buy low and I can sell high tomorrow morning. I want to use the edges of this trading range in combination with, I got some hidden channels, right? Here's my range. I want to use these levels as support and resistance. I've got this, you'll notice quite a bit on this chart, right? But some hidden channel levels, those can be support. I've got a channel level here, that can be resistance. In all reality, I'm trying to look above and below. Where can I find resistance? Where can I find support? And I'm going to use that two-try failure pattern, right? I'll use that two-try failure pattern. Anytime we see a trading range, and this could be a triangle or a range, but anytime we see this market really, dialed in, going sideways here, now we know the job's pretty simple. One try, two try, back down in, one try, two try, back up in. I want to see one try, two try above that range high, one try, two try below that range low. We're buying low, we're selling high, and we're avoiding that middle. So when I go back to my chart now, I can see support, support, support. I can see resistance, resistance, resistance. All of these levels of resistance, these are my targets, right? These are where I want to be incorporating my entry pattern, my two-try failure pattern with those levels of resistance. For example, let's just say price goes higher here, right? My 28.99 and change up there. I want to see it go up, right? That'll be one try. We'll pull back to the moving average, right? Let those buyers try a second time, right? Buyers try twice. Once we see them start to fail, we then look for that sell back down again. One try, two try, failure back down. One try, two try, failure back up. One try, two try, failure back up. One try, two try, failure back down. Stay away from that middle. Don't forget about the 1, 2, 3 breakout, right? What does a breakout look like? One try, two try, it explodes, right? Got to pull back to the moving average. But in this example, right, one try, pull back to the moving average. There's my second try, and the second try doesn't fail. Second try explodes higher. This is where you've got to have that kind of exclamation, right? It's got to be on strength. And trust me, when the market breaks free of a range, everybody's going to know it because it's going to explode like one of those old jack-in-the-boxes, right? When it hits, it'll hit. The key is not trying to trade breakouts before you get a successful breakout. It's very difficult to predict a successful breakout. So one try, pull back to that moving average. Second try, unless we see this thing really jump and run higher, we're looking now for this to collapse back down in, and we can sell back down into that range. Same thing to the downside. I've got my levels of support down here, right? I'm looking for one try, pull back to the moving average. Second try, off the moving average. Now we know. Bears have tried once, bears have tried twice. Now we know where their stops are. I can look for that two-try failure. Again, grab that hidden channel, look for that two-try failure into that hidden channel pullback, and we're back up to the opposite side of the range. We're buying low, we're selling high, we're buying low, we're selling high, and in the meantime, we're staying away from the middle of that trading range. So buying low, selling high, using that two-try failure pattern. Again, stay away from that middle and keep your eyes out, right, for that successful 1, 2, 3 breakout. More of the same here now on the Nasdaq. The Nasdaq is quite similar here, right, to the S&P. The one big difference on the Nasdaq is the triangle. We are trading sideways, this time with the triangle. If you remember, the S&P had quite a clear trading range. This one is a triangle and a pair of measured moves, right, and hidden channels on the chart this evening. Today's session started bullish, as you can see, right? Nice strong bull move, but then turned bearish into lunch and then finished, right, very consolidated and going sideways on the chart. At this point, there's no momentum bull or bear. It's really just a balanced market. So my plan is to fade the breakouts using the 2-try failure pattern until we see something change tomorrow morning. So that's the plan for the S&P. For the Nasdaq, it's a little bit more important because it's a triangle, lower highs and higher lows. See, the S&P has a range. So the range with double tops, double bottoms, right? The S&P has a range. So we're really just focused on those range highs and those range lows. On the Nasdaq, it's not so obvious, right? It's a triangle. So when you think about a triangle, you really want to hone in on those swings, right? On the swings. Basically, the extreme highs and the extreme lows that make up this triangle pattern. Now, the rest of it is pretty much the same thing as we look for on the S&P. I've got my eyes on resistance levels overhead, right? So levels of resistance overhead, support levels below, right? Support levels below. That's relatively simple. Focus on those. And then as we go up to key resistance, 1 try, 2 try, back down. It'll look very similar to this right here. We go up, 1 try, pull back, 2 tries, and then roll over. Usually what will happen is, again, it'll be 1 try, 2 try into that hidden channel pullback. You can kind of see how that hidden channel pullback sets up right there. And again, as I'm talking about these 2-try failures, these hidden channel pullback patterns, I'm just drawing these up right now, try to give you an idea of what we're looking for tomorrow. But if you're a new trader and you want to see hundreds of examples of those real patterns on real charts, again, just grab that free trading class. It's below the video on the blog. It's linked up in the description of the YouTube video. It's also the upper right-hand corner, right, in that information icon. So definitely grab that as well. So again, I'm looking for that 1 try, right, 2 try, and then of course that failure. That failure will almost always give you that opportunity now, right, for that hidden channel pullback. The key is though, right, the key is make sure we stay away from that middle and try to sell high using those patterns, right? As we go lower, 1 try, 2 try, right? Get that moving average down. 1 try, 2 try, failure pattern into hidden channel pullback. Grab that moving average, right, and buy it back up. Stay away from that middle, buy low, and of course, sell high, right? Stay away from that middle, buy low, sell high until what? Until we see a successful 1, 2, 3 breakout, right? 1, 2, 3 breakout. And remember, just a strong move higher is no guarantee. I mean, look at how strong that move higher was. Strong move up, pull back. You would think surely they're going to, no, right back in again. Strong move down. Surely they're going to take it lower. Nope, right back up again. So it's not enough to just get a strong first leg, 1 leg, 2 leg. If they can't hold it, see ya, back down into that range. 1 leg, pull back, 2 legs. Okay, now we have a strength, pullback, strength. Now we get a 1, 2, 3 breakout. Now we can go out and look for that new channel, and we can go buying the low of that channel. If the market breaks out for the bulls, we'll start looking for channels, measured moves, and we'll follow that trend. Same thing to the downside, 1, 2, 3. If we do get that strong run lower, find that new channel, mark up that channel high, and usually it's going to be that prior swing low along the top of that channel. That will typically be where you're going to find the best selling opportunities. But again, until we see that sheer strength of that breakout, it's very important we keep on focusing our energy on going back up into that trading range. Let's keep going. So Nasdaq now and the S&P, we got those ranges behind us on the E-minis. We're not going to go much further from a range right now. This is a little bit easier to trade. This gold market now, gold is bearish with a spike in range, a hidden channel, and a measured move on the chart this evening. The spike in range has a bear bias. That tells me to look for selling opportunities at resistance levels overhead. I've got that strong bear move down into our double tops and double bottoms. That is a range with a bear bias. What does that tell me to do? It tells me to focus on selling at resistance levels up overhead above that range. I can also see a measured move, 1 leg, two leg, right, or a measured pullback or a measured correction, whatever you want to call it, right, that measured move will also line up nicely. If we go a little bit to the right there, right, grab those lows up off those highs, you can see now, combine that hidden channel along with that measured move, and boy, do we have a great area up there between 96, right, and really that big round number at 1200 even. So we know we're bearish. Momentum is bearish. The range here now, what does the range tell me? Buy low, sell high, avoid the middle. It tells me to look for, in this case, because it's a bear bias, look for selling opportunities at resistance, right? Don't buy low, sell high. Where can we find some selling opportunities? Where can we find resistance? The top of this hidden channel. The measured move will act as resistance. And then don't forget, too, we also have that round number at 1200. If I take the size of this range, copy and paste it up, that gives me range expansion resistance up around 98.6. So all of these areas overhead, measured move, channel high, range expansion high, round number high, right? Those are all great levels of resistance. So basically at this point now, we're just waiting for our shot, right, for that 2 try rule. So 1 try, pull back to the moving average, right? 2 tries, and then back down into that range. And I know I sound like a broken record right now, but lots of ranges right now mean lots of fading the breakouts, right? Using those 2 try failure patterns. Now, what about if we go lower here? Can I use that 1 try, 2 try to buy off that low? You got to be careful on those, because a lot of times what happens is you'll see it 1 try, you'll see it 2 tries, and then, normally if the market was bullish, we would then be looking for a buy, right, coming off of that low, right? So if the market was bullish, we'd be looking for the buy by using that 2 try rule, right? That would be your 1 try and 2 try, and we'd buy that break higher. The problem, though, is with momentum being bearish, we oftentimes run into this problem where it'll trap high and run, right? So you don't want to get roped into trying to sell that particular trap high, because again, you're going against the market's momentum. What I would rather do, in fact, we're going to talk more about this in a second in the euro, so I'll show you how to apply this theory on the euro here in a second, where momentum is too strong to the bears to be using a 2 try failure for the bulls, right? It's just too strong. What I'd rather do now is wait for proof and then buy the pullback, right? Wait for proof and then buy the pullback. And you can kind of see that happening right here, right? 1 try, 2 try, pullback going higher from there, right? Again, I'm not going to say it's the most reliable thing in the world, because the overall momentum is clearly bearish right now. However, when you're looking at this in terms of it's a bear bias, I can go 1 try, 2 try, right? And I can sell going back into that range, or 1 try, 2 try, can I buy going back into that range? It's not the easiest of trades there, because a lot of times that momentum will carry it lower. So I'm going to wait for this up, show me proof, right? And then we'll look for that buy, right, coming off of that trend line. That's an example of what I always say, you're trading profitability for probability, right? You're willing, if you're going against that trend or against the momentum, you're willing to take a little bit less profit to offset the odds of success, right? Yes, you're not, or you can make more money on this trade by taking that break higher there on the 2 try rule, but the odds aren't as high there. So it's much better to wait for the more reliable pattern, even though you're not going to make as much money on it. Trade probability for profitability. I'll gladly give you a little bit of my profit to dramatically increase, right, the odds of my success or that probability. Now, how do we break out of this range? That's pretty simple, right? Breakout, 1, 2, 3, break higher, 1, 2, 3. If we do get that break higher, mark that high, mark that new channel, and I'm looking to buy that pullback on the way higher here. Targets are waiting up around that 1210 if these buyers can take it. What if we go lower here, right? What if we head lower here, right? 1, 2, 3, then what? What are we doing down here? Now you've really got to wait, because what you really want is to get that moving average to clear below those 86 levels. If we can get us through that low and go, well, now we've got the green light. But you got to make sure you can get that moving average below that 86 area, because that's the only way you're going to really be safe, so you're not selling in the low of that range. Once we see that, then we can start looking for that new channel. We can use that new channel, or oftentimes we'll see a wider channel like that, right? And we can look for it up around those highs. So you're selling the high of the larger channel, selling the high of the smaller channel. Obviously, we don't know what exactly we're going to see for tomorrow, but the key is if we do see a breakout, it's going to be strength, pullback, strength, and we've got to see that moving average really clear below, right, that 86 area. Once we get that, perfect. Now we can mark up those levels of resistance, and we can look for that sell, right, to continue this party moving lower. But again, we got to see some strength as we go below that range. Whole lot easier selling high than trying to sell low. Let's wrap things up here now on the mighty euro, and the euro is a very interesting chart and definitely a lesson to learn here for really anything going forward. The euro is long-term bearish. You can see as I look left here, right? Euro is definitely long-term bearish, but short-term bullish. Strength, pullback, strength, right? So short-term bullish with a trading range. It's that big wide range there, and a hidden channel on the chart this evening, right? That little hidden channel I got drawn up here right now. Now, the trading range appears to be the big clue for tomorrow. Sellers appear to have failed to be able to hold below that range. And so once they fail to hold below that range, typically what will happen now is we'll rotate back to the opposite side. In fact, you could even measure the amount below that range. We talked about the pendulum swing target on oil earlier on in this video. Take that pendulum swing, copy and paste it higher, and now you've got even more detail here now, right, of where this market really wants to go. 16,300, right, and of course that 16,000. So 16,000 makes for an easy short-term objective, right, longer term up there around 16,300 to complete that pendulum swing. So now we see momentum swing back in the favor, right, of the bulls, with that target now going back up to retest that high. The key now is to look for what I call a failed failure pattern, which basically means that with the long-term trend being bearish, and again, you can see those, right, sellers here, just, I mean, literally at first glance, you would think, oh, this is a bear market, and it may end up back to being a bear market tomorrow, but right now, that long-term momentum is bearish. Short-term momentum is not, though. We have too much strength off that moving average. The reality is this short-term trend is bullish right now. So I can expect, if I was a seller, I'd be looking for a two-try failure here to sell back down, right? Wouldn't you? If I was looking for a sell right now, if I thought the market was bearish, I'd be looking for that 1, 2 failure back down. The problem, though, is that once we see that bullish momentum going higher, remember we talked about this on gold, what's going to happen? There'll be buyers waiting down here, right? There'll be buyers waiting below that prior swing. Just like we talked about, right, back on gold, right? Remember on gold with that bear momentum going lower, right? Back on gold for a second, 1 try, 2 try, right? We can't buy that failure because you're going to see too much momentum, and sellers are going to try to sell that little trap high. That's why you got to be careful with failure patterns going against the momentum. Well, the reason why that happens is because the overall momentum is bearish. Okay, now if the overall momentum is bullish, right, for the euro, and we start looking for a failure pattern here, what's going to happen? We'll get the failure, but you're going to see buyers coming right in here now trying to buy off of that low. And that's what I call a failed failure, right? It's a failure pattern. It's a buyer failure pattern, right, that I can anticipate sellers, long-term sellers, are probably going to try to get in on. I'm hoping they do, because then all I need is that nice strong signal, right, off of that low, and now we've got the bears exactly where we want them and where they would rather not be. They're going to be stuck in a short position as the market rallies back up to retest that high. So I'm looking for that rally back up, right, back up to retest the high, and I'd like to be a buyer once I see those sellers take the bait, right? Once they take the bait, then we can look for it. So I'm waiting for the next pullback. Let those buyers struggle because you're in the middle of that range. Nobody wants to buy the middle. Hopefully those buyers will struggle. Hopefully we'll see them pull back, and then we can look for that nice strong signal, right, and run that sucker right back up, right, to retest the high. It's a failed failure pattern. And what's the most important rule for a failed failure? Short-term momentum, right? What is the short-term momentum right now? A lot of times what will happen is you'll see a market, for example, like a bull market, right? You'll see a bull market. The market will pull back, but as it pulls back, it runs off that moving average. And this momentum creates a short-term bear market. The long-term bulls still want to buy it, but that momentum has turned now. And so what happens is the next time this thing pulls back and you see buyers trying to buy, they get clobbered up here and bears come in and just take them down, right? It's that failed failure, right? As the buyers here now are looking for that failure now, all you get is sellers. Because again, that momentum coming off the moving average was too strong, right? That momentum has shifted now, and because it's shifted, this one try, two try just will not be very reliable, and that's where you're looking to sell. Again, this would be if the market was bullish into bearish, right? The opposite is true here, right, on this euro. Right, so 1, 2, 3, nice big strong move up. I want to see them try and fail. That will get those bears, right, trying to sell this. They're trying to sell into the low of that range. All we need now is a nice strong signal, and we're buying back up to the high of that range. Once we get back to the high of the range, it's one try, it's two try, right? One try, two try, and then what? And then back down into that range again. Right, very similar to what we saw here. One try, two try, back down into that range. This time, trying to go back up to retest that high. Look for that failed failure. Little trap low, right? Trap low, failed failure, off the low of that range, and the target going back up to retest the high. What if I'm wrong, right? What if I'm wrong? What does it look like? Well, if I'm wrong, it'll dump, right? It'll collapse. You'll see it just collapse here, right, as this market runs lower. The good news is if we see it collapse, right, it's not all lost. Just find that new channel, right, and look for that hidden channel pullback. You know, again, you're trading probability for profitability, right? I'd rather trade the more probable direction. If I miss the move going lower, then so be it. I'm not going to miss them all, right? But I want to make sure I'm focused on what are the most probable opportunities, right? Because that's what in the long run will grow my account like a weed. Guys, don't forget, you can learn a whole lot more about traps, two-try rules, failed failure patterns by grabbing that free trading course. It's right below the video here on the blog. It's also linked up in the description of the YouTube video. And if you're on YouTube or on the blog, you can find that little information icon in the upper right-hand corner and get registered. Wrapping up here for tonight, though, thank you so much for putting up with my voice here this evening. It probably doesn't sound as bad as it feels, but hopefully it wasn't too difficult to listen to tonight. Hopefully I'll get back to full steam ahead tomorrow morning. Don't forget, if you're brand new at this, we got a great free trial on the homepage here at School of Trade. Find all the links in the description of the video. And then don't forget, we have a toll-free number, beginner, intermediate, advanced classes, live support. Check it out. Learn more about becoming a new client, joining our trade room every morning at 8 o'clock Eastern Time. And don't be afraid to pick up the phone and give me a call anytime you want. I always enjoy talking to all my clients. So pick up the phone and give us a call toll free here at our corporate headquarters in Los Angeles. Great to be back with you guys. Hope you all had a great holiday weekend. We got some work to do this week, though, so roll those sleeves up. We'll see you tomorrow morning in the trade room, 8 o'clock Eastern time. If not, we'll see you tomorrow evening, same time, same place. Who you got tonight? Red Sox or Yankees? What are we thinking? Boy, it was a nail biter last night, wasn't it? I wonder if it'll be a little bit closer of a game here tonight. I'll leave my predictions to myself, but I'll see you guys tomorrow morning bright and early. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos.